It's time now for Real Estate Update. With Usha Chandra of GlobeNet Realty, real estate is our world.
Now we're standing here face to face, afraid.
Ladies and gentlemen, once again, welcome to this very important segment where we talk real estate. So, all real estate with Usha Chandra of GlobeNet Realty. With that, welcome to the show, Usha.
Thank you so much for having me on your show, Mesh, and Australian Indian Radio.
Well, it's always so good to have you back. And today we are going to be talking a lot about the rent markets. But in the end, we might as well look at some of the rental scenes as well. But of course, as we know, that what's happening in the market is quite reported out in the industry. And there's so much happening. And with all that happening, we always gauge our markets at the auction results. So what has been the overview for the last week?
Yes, absolutely great results. The combined capital city auction market experienced its busiest week of the year, with 3,562 homes taken to auction. So every state was busy at auctions. This is up 8.2% from previous week, when 3,292 homes were sold under the hammer. With volumes remaining high, the combined capital city preliminary clearance rate has continued to trend downward for the fifth consecutive week, with 2,933 results collected so far. 75.5% were successful, down from its recent peak of 84.4% week ending 3rd of October. Last week reported a preliminary clearance rate of 76.1%, which was revised down then to 73% at final figures. This time last year, 70.6% of the total 1,728 auctions were held were very successful. Looking at the market was a little bit down, but the results were pretty good. Looking at the number of auctions, the percentage was a bit down by from 84% to 80% to 75.5%, but it was pretty good looking at the peak of 84.4% ending October. So it has been down from October, 3rd of October, 75.5% were successful.
Well, that is very good news. If you look at last year, in our clearance rate was 70.6% and 76.1% this year at that time. So that's a pretty good growth there as well. So yes, that is indicative of what's happening out there in the market. So, in terms of the actual results for auctions, so how does that equate?
Let's have a quick look at the auction results in major cities. Sydney was 75.1% was the clearance rate, and 1,290 properties were taken to auction. 1,086 sold under the hammer. Melbourne is quite good result, 74.1%. 1,556 properties were taken to auction, and very good results looking at 1,324 sold under the hammer. Brisbane was down from 84% from the previous result to 80%. 285 homes were taken to auction and 200 sold under the hammer. Adelaide was down as well, 77.8%. 243 properties were taken to auction and 162 sold under the hammer. Looking at Perth, 83.3% down there as well. 19 properties were taken to auction and 12 sold under the hammer. Tasmania was not applicable at all. Canberra is down as well from 82% to 79.9%. 164 properties were taken to auction and 144 sold under the hammer. So let's have a quick look at the combined capital cities. Average was 75.5%. 3,562 properties were taken to auction and 2,933 sold under the hammer. So still pretty good results. More properties were taken to auction, but the percentage was down a little bit, but still pretty good results compared to last year.
Well, the results are pretty good when you look at all those numbers that you have just gone through, and the weighted average of 75.5% is pretty good, in any market, but especially in today's market. So, of course, when we look at that, what does it equate to, listings-wise? Because we know that market is only as good as the number of listings available for sale as well, because this chart where we look at the number of listing also determines the price that people ultimately pay. People might say, what does it matter how many properties came on the market? It does, because it's then equates to the supply and demand. If there's more properties in supply and demand is, so that dictates the price. So let's take a look at all the properties listed in this period.
Yes, let's have a quick look at the properties listed in the 4-week count. First of all, we'll look at Brisbane. 4,986 new properties were listed, and up to date is 14,149 properties. Looking at Sydney market, 10,110 properties were listed in the 4-week count, 23,330 properties year to date. Canberra was 898 properties where new listings were listed, and 1,834 year to date. Melbourne was quite large in listings, 11,736 properties were listed, 31,293 properties year to date. Looking at Darwin was 233 new listings, year to date is 945. Perth was quite high as well, 4,884 new properties, year to date is 15,480 properties. Hobart was 358 new listings, and 945 was year to date. Looking at Adelaide, 2,333 new listings, 5,490 was the year to date. So the listing showed in the 4-week count in Adelaide has increased quite a lot. Looking at the year to date was 5,490. Let's have a quick look at the combined capital cities total number of listings. For 4-week count was 35,536, and year to date was 93,267 properties.
So that sounds quite a good market when year to date is 93,000 and in that last period is 35,536. So yes, listings are coming aboard, which is good to see, because that keeps the market going. Okay, now of course we have looked at the auctions, we've looked at the number of listings, and of course every week we also look at the normal sales, the private treaty sales for the average mum and dad one. So what's been happening in the private treaty medium sales?
Yes, a lot of people still prefer, especially mum and dads, they still prefer to buy as private treaty. So looking at the capital cities, the number of sales in Sydney by private negotiations was 1,986 properties sold, and 1,017,750 were the median price. The price has gone a little bit down. It was 1,020,000 before. Melbourne is 2,462 new number of sales, and 755,000 is their median price. The price has gone up by 5,000 in Melbourne. Looking at Brisbane, 1,495 properties were sold, 625 is their median price. So the median price has gone up in Brisbane again. It was 615 in the previous week's result. Adelaide, 729 properties sold, 550 is their median price, holding very well there. Looking at Perth, 1,161 properties sold, 515 is their median price. Hobart is 143 properties sold, and 759 is their median price, more higher than Melbourne. Looking at Darwin, 37 properties sold, 590 is their median price, holding pretty steady in Darwin. Canberra is 56 properties sold, 931 is their median price. It's gone a little bit high from 900 to 931,000, so it's gone up by 31,500. So looking at the capital cities in houses, 8,069 properties, houses sold, and median price in combined capital cities is 743,000. Now let's have a quick look at the units and apartments. Looking at 1,289 apartments sold in Sydney, and 687 is their median price, gone down a little bit lower. 689 was their last previous result. 1,158 apartments sold in Melbourne. 559 is their median price, pretty steady there. 474 apartments sold in Brisbane. 405 is their median price. It's gone down as well in Brisbane in apartments and unit sales. 216 sold in Adelaide. 366 is their median price, holding pretty steady there. Looking at Perth, 377 apartments sold, 400 is their price, median price. It's pretty steady there as well. And let's have a quick look at Hobart, 30 apartments sold, 505 is their median price, gone up by 5,000. And Darwin, 28 apartments sold, 423 is their price, median price is gone up by $3,000. 420 was their previous result. Canberra, the 119 apartments sold, their price has gone down. In apartments, 489,000, it was over 500,000 before. Looking at the capital combined cities, 3,691 apartments and units sold, and median price is 552,866. So looking at the especially the houses, more houses sold in this period compared to the apartments. It's more than doubled in houses. So it's pretty good results compared to what the market is doing at the moment.
Yes, the results are normally we used to look at say 8,000, so there would have been 4,000 in it. Normally it has been 50%. Not this time. The houses has outnumbered that, so 8,000 as compared to 3,600 of the units. So that's what's happening out there in the market. Well, right now moving on. Looking at the sales, we have looked at the number of listings. We've looked at both methods of sales. We have looked at the auctions. We have looked at the private treaty sale as well. But in a changing market, as we have just mentioned before, that there's a large number of properties coming on the market, especially in the auction scene. How long is it now taking for properties to sell, and are vendors having to discount prices?
Yes, looking at the Sydney market, 23 days, it's pretty normal for the previous quarter actually. It takes approximately 23 to 25 days, and vendor discount is minus 2.4% in houses. And let's have a quick look at the units at the same time as well. 30 days on the market, minus 2.1% in discounts in Sydney market. Melbourne is 26 days, has come down as well. It was over 30 days before, minus 1.8% is vendor discount, and 36 days for units and apartment. It was over 45 days in units and apartment. So Melbourne market has picked up really dramatically. It's a really good market there. Brisbane is 32 days. It's still taking longer. I don't know why in Brisbane. In our area it takes one week or 1 day actually, so some properties. And vendor discounting is only minus 3%. 42 days in apartments and units, minus 2.7% vendor discount. Adelaide is 25 days, my vendor discount is 2.9%, and apartments 35 days, minus 3.3%. Perth is 33 days, minus 2.7%, and apartments 43 days, minus 3%. Hobart is 24 days on the market, no discount over there in houses. 19 days on apartments as well, no discount there as well. Darwin is 60 days, minus 2.4%. It's really high. Looking at the Darwin market, the properties are remaining on the market for very long. And 40 days in apartments and units. Looking at 60 days and 40 days there, Canberra is 29 days on the market, being on the market for a longer period but no discount, and 30 days on the apartments, minus 1.5% discount. So looking at the averaging of all these number of days on the market, it's gone down a little bit compared to previous results. Some of the properties were on the market in Sydney and in Brisbane for longer than what the current situation is.
So that means it's taking less time to sell now. Yeah, more property is moving faster and quicker. Okay,
That's correct, yeah.
Right, and as we said in the very beginning of today's show, is that in today's show we'd like to focus a little bit on the rental scene. So what's what's happening in the rental scenes?
Looking at the rental market is extremely good. While the rental rates are rising at fast pace since 2008, the gap has opened up between the rate of growth in house rents compared with unit rents. With unit precinct across the inner cities areas of some capital cities recording a much weaker performance though the COVID period to date. Overall, unit rents have risen at a slower pace than house rents since the onset of COVID in March last year, with capital city units rents falling 5.7%. It's a drastic fall there between April and December 2020. Unit rents have been consistently rising through 2021, but the rate of growth has been lower relative to house. However, the more recent trend shows growth in unit rent is catching up to houses. So looking at the market growth in units and apartments compared to last year, it shows it's going quite high. More people are coming back to work, I think, in the inner city. That's the result. The unit prices in rent has gone higher.
So it is good to see that the inner city units and the apartments are slowly catching up to the houses. But in the peak of the pandemic, the inner city apartment rental demand had actually diminished. So that's what this report is saying, which is quite true. So okay, so what is the further outlook for rentals?
Oh, extremely good news for landlords that rents are now rising across each of the inner city unit precincts of Australia. Even Melbourne inner city unit rents are 2.4% higher over the 3-month ending October and 1.1% higher over the 12-month period. Rental demand in inner city tenancies is likely to increase further as the CBD and inner suburbs become more vibrant as restrictions ease and workers gradually are returning to work.
That's what you said, yeah.
Yeah. Once international borders open more fully, it's likely the demand for inner city unit accommodation will rise more, especially as foreign students and international visitor numbers start lifting. However, the timing of the normalization of overseas migration rate remains highly uncertain depending on the government policy and appetite for traveling abroad. So if people are thinking of traveling abroad, if the restrictions are eased and the COVID fear is gone, it's more likely more international students and more international tourists will be coming to Australia.
So the further outlook is that yes, the inner city apartment market is on the rise in the rentals, and as the restrictions ease and the international travel begins, it will be even going higher. So that is good news, as you mentioned there, for the landlord. So once again, thank you so much for being on the show today. And is there anything specific that you'd like to talk about in your area, maybe open houses or auctions?
Yes, we have got a couple of open houses this Saturday. Number one, Song Bedway, which is a brand new listing, which will be open on Saturday. We have got multiple offers on the property. The owner is expecting a bit higher price on that. We have got another one at 127 Aberdeen Parade. I've got few offers. I'm negotiating on that. So hopefully there won't be any open houses on that. We have got a brand new listing at 24 Annesley Crescent, which has just come on the market yesterday, and it will be open on Saturday at 10 o'clock. So hopefully we'll sell that property at the first open house, expecting to sell that one. Another property we had at 112 Muller Road, we have got multiple offers, and it's a cash unconditional contract on that as well. So Vicky has got a couple of new rentals, so she'll be doing open house on Saturday at apartment in Stenworth Road in Boondall, and another one has come at Lord's Place, number 7 Lord's Place, 4 bedrooms, 2 bathrooms, 2 garage, with 570 a week in rent. So that will be that's a break lease actually, and that will be rented very, very quickly. The market is picking up fairly quickly in our area, and we are getting some listings now and some rentals now. So hopefully we'll get more listings and more rentals before Christmas, and so everybody can have their Christmas in their new home.
Christmas in the new home, that sounds pretty good. That's a very good tagline there. Well, once again, Usha, thank you so much for all that information, and wishing you all the best for the open houses in the weekend.
Thank you for having me on your show.
And ladies and gentlemen, that was the weekly real estate update with Usha Chandra. And of course, we were talking about the interest rate and what's going to happen with that. Here's that report. We're going to leave you with this report.
The pandemic's been a boon to the housing market. Australians spending big on homes as interest rates hit all-time lows. That's left tens of thousands of households exposed when borrowing costs inevitably increase.
If we're successful, interest rates will go up. And people who are borrowing today need to remember that.
The Reserve Bank governor warning mortgage pain is on the way. Just a question of when and how much. The financial market predicts it'll happen next year, pricing in more than a full percentage point increase to the official cash rate over the next 18 months or so. But Philip Lowe doesn't agree.
The latest data and forecasts do not warrant an increase in the cash rate in 2022.
A relief for homeowners, at least in the short term. The average new home loan in New South Wales is $750,000, $634,000 in Victoria. If interest rates increase by 1 percentage point, monthly repayments would increase by $400 on a 30-year loan in New South Wales, or about $340 in Victoria.
Good morning, nice to meet you.
Scott Morrison's already on the election footing, claiming only the coalition can protect the population from hip pocket pressures.
Otherwise, you're going to see petrol prices go up, you're going to see electricity prices go up, you're going to see interest rates go up more than they would need to.
It's an old tactic too.
I will guarantee that interest rates are always going to be lower under a coalition government.
The liar from the Shire is at it again. Here we've got the Prime Minister mounting yet another ridiculous and pathetic scare campaign.
Talking about facts and the lived experience is something that we will happily stand by.
For Scott Morrison to dip into John Howard's playbook on trust and economic management months out from voting day is instructive. It tells you the Prime Minister believes the election will be decided by who voters think can best manage the post-pandemic recovery. But it also tells you he's desperate to tear at Anthony Albanese's trustworthiness to make up for a perceived deficit in his own. Andrew Probyn, ABC News.
And we'll leave you with that news bulletin there. But, well, of course, the good point there is that the interest rate is not going to be rising immediately. So there is a bit of a relief, maybe 2022 sometime, but not in the early part of 2022, as per that report from Reserve Bank of Australia. So, ladies and gentlemen, this has been a real estate update with Usha Chandra of GlobeNet Realty.
Has been the longest established, trusted and respected agency in its trade area. Usha Chandra, Director of GlobeNet Realty, provides honest and ethical service to her customers. If you are thinking of investing in Brisbane real estate market, or if you are seeking professional property management, then you should contact Usha Chandra today on landline 3865 4466 or mobile 0419 775 416. And for further updates, log on to our website www.globenetralty.com.au. GlobeNet Realty is your own local real estate agency. Situated at Shop 52281 Sandgate Road, Boondall. GlobeNet Realty. Real estate is our world.
And real estate. Stay well, and don't forget that every Wednesday, as was today, is when we have all the weekly real estate update with Usha Chandra of GlobeNet Realty. Until next time, it's goodbye from us.